Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. And this is part 2 about investing in real estate in Oklahoma City, Oklahoma, and the power of leverage. Now, in the previous video, what I talked about is contrasting buying one property cash or using that money to buy 4 with leverage. In other words, doing 20% down and carrying the rest in a mortgage, and what the advantages can be to both sides, especially buying 4 properties that cover you against the downside of being vacant, as well as extending your reach and your ability to achieve more positive cash flow. Now, what I want to go into today is a little bit more about some of the definitions of terms that we use to determine if leverage is a good thing or not. And now there's no absolute, like 10% capitalization rate is kind of a cliche. Sometimes people use that to buy, but what we want to just talk about is how we define terms like capitalization rate, cash on cash, and internal rate of return. And today I want to go into internal rate of return. Now, by definition, internal rate of return is the amount of money that you make on a percentage basis annually, as long as you keep all of that money within the investment. And it's a fairly complex formula that I learned to do years ago, and I have on an Excel spreadsheet. And just some of the factors, for instance, that go into this analysis is how long are we going to hold the property? What, of course, is the vacancy rate? What is the management fee? What is possible appreciation? What is maintenance we expect? What's that going to be? What about debt service? What about reinvesting the investment rate of the profits? What is the possibility of what you're going to pay on taxes if you just want to cash out? All these things go into an annualized return so you can compare it against other types of investment. And that's a very, very important thing to do. So leverage essentially is this. Think of a tool, and what you're trying to do is, for instance, get a nail out of a piece of wood. Now, you can take your finger in your hand and try to pull it out, but it doesn't do too well, doesn't it, that way? So what we do is we take a hammer and we pry it out with the hammer. That is using leverage. That is using a tool. Financing real estate is very, very similar. It is taking 100% of the investment, and instead of investing 100% of cash into that investment, we invest 20% and we finance 80%. Now, there's always an acceptable level of leverage. Now, we're not going to go back to 2005 nuttiness. We're not going to go back to investors that can get 100% financing on their properties. So we need to realize that anytime we put our money out with leverage, there is risk. So if you buy right, in other words, if you buy in the Oklahoma City, Oklahoma market, which has stable pricing that hasn't lost value, and you buy a short sale, well, we start off 25% to the good, don't we? That is the typical amount that you save. Then we finance that loan and we use 20% more down payment, $45,000 property, $9,000. And so what we have is even a greater spread now between ultimately what the property is worth, which is in this case maybe $65,000, and then what we owe on the property, which in this case, if it was $45,000, we did $9,000 is $36,000. So that's an acceptable downside. You've got a lot of room to work with. You have $400 or more positive cash flow. And that is the power of leverage. And we will give you those statistics. We will give you that annualized return on investment. We'll give you a before-tax rate and an after-tax rate. In a later video, I'll explain why we give you a before-tax rate and how that can be important to you. And in the next video, we'll go into that cash on cash, and we'll also go into capitalization rate. But we're going to give you all of this information so that you can make informed decisions. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.